dropped for the first time in 5 months. It was dragged down by weaker manufacturing as part of an economic slowdown that is now prompting the huge stimulus measures that we have seen this week. And to help us all to break down all that has developed this week, we have Kian Soon, a CEO and fund manager at Astral Asset Management. Kian Soon, it's good to have you on. I just want to talk about, what happened this morning. China now announcing that it has cut the triple R by 50 basis points after it signaled such a move earlier this week. We also heard that the PBOC lowered the 7-day reverse repo rate to 1.5%. So what do you make of the latest moves, especially as it's just another one on top of all the other stimulus measures that we've been getting throughout the week?
This is indeed a very busy week as we witness the shock and awe measures coming out of China, measures after measures in terms of monetary loosening, cutting of rates, announced in quick fashion in the last few days. And that sent the stock markets roaring, as we have seen in Hang Seng as well as the Chinese indices.
Right. I want to talk about the timing now of the moves. Does this have anything to do with shoring up sentiment ahead of the 75th anniversary of the PRC? And if so, what is a likely impact on markets? How far do you think it will go on that front? Because we saw the measures coming in fast and furious this week.
Indeed, there's reports about the timing of these measures, but I think it's also critical that the Chinese government has recognized the situation of the economy, which is indeed slowing down for the third quarter, 2024 in particular. And I reckon that the measures announced are all to address the economic slowdown, to help the China to achieve its 5% GDP growth target, as well as in terms of timing, timing it well for the coming Chinese national holidays.
Right. Kian Soon, let's talk about, the Chinese government bond yields, the 30-year yields. It continues to fall to fresh lows despite, the announcements of the stimulus blitz. Help us understand this development and whether you think the yields are near the bottom or whether there's more to go and what that would be subject to.
I reckon there's more to go for the bond yields, which is something that's of a concern. But at the end of the day, monetary loosening policies is just one part of the solution, to address China's economic woes. The government definitely needs to follow up in terms of fiscal policies, which is what the whole market is awaiting, in terms of stimulating consumers' demand, in terms of increasing, businessmen and entrepreneurs' confidence to invest in their business, to help to revive the struggling economy.
Right. And, after all the measures that we're seeing this week, looking at China markets again, are there still opportunities there? In fact, are there more opportunities now that, we're hearing what the government plans to do?
In terms of opportunities, I think the market reacted ferociously this week, mainly because of the sectors that benefits from a lowering of interest rates. And we could see that for the property developer sector and, any sectors that are highly geared. And these are the companies that will benefit from lower interest rates. But, this thing will play out as the economy resumes its growth momentum. We will definitely see the other sectors playing catch up. And we're talking about consumers, which has been lagging for a while. And these sectors, with economic measures that's being announced, will definitely revive as the business sentiments improve. Consumers start to spend money again. But we're looking at these sectors in the coming 3 to 6 months.
All right. Concerns, I want to talk about Tokyo consumer inflation easing to about 2% in the latest data that just came out today. But, the latest figures are unlikely to deter the BOJ from implementing that rate hike at the end of the year. What's your assessment on what we could see?
I think for Japan, the main focus is always on the interest rates hike. We have seen that, 2 months ago, the first increase in interest rates create a big stir in the markets, and that's definitely a focus for the whole markets when it comes to the Japanese equities and bonds markets. With respect to an interest rate hike coming to the end of the year, I think it will definitely happen. It's a matter of timing. If it doesn't happen at the end of the year, they are likely to implement it, announce and implement it at the beginning of next year. As you see there's still a wide differential between the interest rates between Japan and United States, and hence we could see the implications of the coming hike. Bearing in mind that the Fed and the Central Bank of the United States is looking at lowering the interest rates slowly in the coming year.
All right. And before we go, let's talk about the outlook for Asia. What else will be, key drivers now that we've seen significant moves by China as well as the US? What else will be driving markets ahead?
In terms of the Asian markets, they've been doing pretty well, with the exception of Greater China regions. And I see that, with the revival of China's economy and the measures that are being implemented, the other markets will definitely benefit. As we've seen in terms of short term, the markets have already rallied strongly in the last few days. But in the longer term, especially for Southeast Asia, which has a lot of trade relationships with, the second largest economy in the world, China, the economies here will definitely benefit with larger exports numbers to China, given that we have a manufacturing base and we provide raw materials to China, and definitely that will be beneficial for Southeast Asia.
All right, Kian Soon, appreciate your time this morning. Kian Soon, the CEO and fund manager, Astral Asset Management. And that is your